A non-executive board member of Highsand Development Company. Is that new, actually?
That's correct. Oh, about 3 years.
Oh, 3 years? Okay. And Longford Properties, that's new, no?
No, that's about 4 years.
And Joshua Crabb, he's pretty new. Look at him. Good to see you, Peter.
Good to be here, Bernie.
Okay, I'm really glad that Norman and John came out, to reassure the public that, the sky is not falling. And I trust John. I've known him for a long time.
Yes.
He's been financial secretary a long time. He'll come up with $73 trillion in surpluses this year, so I'm not worried at all.
That's okay.
Yeah.
And, he was the director of planning in the Hong Kong government many years ago.
Yeah.
Land planning, not financial planning. So it's a big transition for him.
He's an architect by training, too.
Yeah, that's
so he knows
right.
how to draw. Did you know that?
Yes, no, he does. I've seen him.
Yeah, it's really suited to the job, huh, Em?
Yeah, well, you know what? The government already had indicated that they're not going to be getting rid of any property curbs. This is despite a softening market that we are expecting to see. What do you make of that?
Well, quite frankly, this Fed rate hike is going to, the trajectory of this is going to be more like a drone than the space shuttle. So it's going to be very slow. I think we've already seen about 7% to almost 6% down in property prices in the last 4 months in Hong Kong. Transactions volumes have slowed dramatically, but it's less about interest rates and more about supply, a slowing economy, and these fiscal tightening measures that the government has in place. All these extra stamp duties are really driving people out of the market. So if prices fall, as I expect they will, I think you're going to be able to buy your flat about 15% cheaper in a year from now.
What?
Absolutely.
50%? Did you
15.
Oh, 15.
No,
okay.
Not 50. No,
Jeez.
1-5.
Did you hear? I heard 50. Did you hear 50? Josh, you're shaking.
I wanted to hear 50, but I did.
You wanted to hear 50, and I invited you onto the show? Jeez, I can't believe.
Well, the last down cycle, it was down 50, so we're not going to see that this time. But certainly, I think if we do see down 15 or 20% in the next 12 months, I think John Chang's going to be thinking again about easing up on these fiscal measures, the high stamp duties and so on.
They're not very good about easing up on anything because officials in Hong Kong have this habit of once they do something, just sticking with it through, good or bad. There have been opportunities where we would have been glowing to dump the peg at certain points in history since 1983, but they never had the gumption to do it.
Yeah, well, on this one, I think they will. You've already seen some minor easing. They've made it much easier for buyers to buy properties off the developers in the new market, the first-hand market, but they've made it tougher to buy it in the secondary market. So they're helping the developers here. They're not helping the consumer and the guy who wants to sell his apartment, but they're helping the developers sell their new apartments.
They've turned the developers into bankers instead of developers.
Well, they're part of fiscal
Norman
fiscal
Chan
machine.
wants people to put 50, 60% down because, you know why? He's still worried about Bank of Commerce and Credit and Commerce International. Well, he's worried about 1993 again.
Yeah, he's worried about excess leverage, and Hong Kong's always been pretty good, even right through the SARS period, and even right back into 1981-84 when property markets crashed 60-70%.
Defaults
we've had
were 1%.
very low default rate.
1%
Exactly.
maximum.
So I think he just wants to maintain that kind of scenario going forward, and I think that's the rationale behind it, and I don't disagree with that.
Peter, I know you're a property guy, but amongst the comments that came out this morning is that they have no plans to abandon the dollar peg. Has that been a good thing or a bad thing for Hong Kong?
Well, I think over the long term it's been a good thing. It has destined Hong Kong to increased volatility both in its stock markets and its asset prices, particularly real estate, because often we have interest rates that are at odds with the economy. And if we go back to 97, 98, we were in deflation for many years. We needed lower interest rates, but we had to keep with what was going on in the US. So we end up with a situation which really promotes volatility in asset prices through the peg. So we've learned to live with that, so stick with it.
I want you to put your money where your mouth is on your way out, Peter. Desk is over there. I want you to leave the title to your house there, and the check will be on its way. 15% less.
I'll leave you the stocks instead.
You said 15% less. I will live in you. I will buy your place right now for 15% less. Peter Churchill's our good friend. He'll be back. I know it. And Joshua will say, hopefully. Coming up with rates starting to head higher, how should you be managing your credit card debt? Okay, this is going to get really personal right ahead.
Thanks for the advice. I'll think about it.